Hello and welcome to Panther Financial Services. This is Pranav Patil. If you remember in the last discussion, I did mention we will be discussing two topics in the next video. One that is valuation part, and second is what is a market risk. We will be discussing these 2 points today in this video. Hope you will enjoy the entire discussion which we will have it. So let's understand what is valuation. Valuation is nothing but the share price of that particular company. Now at the higher level, from the fund manager perspective, we look at from the market cap. So market cap is nothing but share price into the number of outstanding shares. For example, Apple has 100 shares in the market which has a 10 rupees value. So indirectly the market cap will be 1000 rupees. So this is called as a valuations. Now we need to understand what is the right valuation. Is there any way we can calculate the right valuation? Currently in the market, most of the people see technical and fundamental. There are two ways to value the company. Fundamental is nothing but you judge the future flow, future cash flow. For example, this year company has 100 rupees sell. In the next year, you expect from that company will be reaching 130. In the next year, the company goes from 160. In the fourth year, company goes 200, and in the fifth year, company goes 300. So this is the projection. You do it, and on that basis, you decide the future valuation of that company, and accordingly you acquire the shares of that company from the long term perspective. So this is I'm telling you at the higher level. In the detail we will be discussing technical and fundamental valuation in the another video. Today we will be discussing totally different way of looking at the valuations. Now what is that? We will discuss these points with a simple example. Let's take Apple has a 2.64 trillion market cap. Dollar I'm talking about. Apple has $2.64 trillion market cap. Microsoft has $2.05 trillion market cap, and Google has 1.6 trillion market cap. So we will take these three examples. If you calculate all these three companies market cap, the total is 6.3 trillion market cap, which is equivalent to more than twice of Indian economy. So is it fair value? Do you think it is fair value? Or is there any way we can judge this valuation? Is it first, or is it higher valuation, or is it lower valuation, or it is at the par valuation? We will discuss why these things happens. What is the another way why the share price has gone so high, for this company is reaching at 6.3 or 5 trillion dollar. So let's discuss one by one. Let's understand what Microsoft does. If you on daily basis you use the Excel file, PowerPoint or PDF or Word format, on daily basis you use it on the mobile or on your laptop or computer, daily basis, right? Without that you are nowhere. If you don't use the Excel file or Word or PPT or PDF, will you manage your work? Absolutely not possible. So without and do you really pay for that? I doubt that. Where at whatever we use in the mobile or on the personal level, we don't pay mostly. At the commercial level, at the higher, when the companies tech companies uses this product, they pay it. But at the retail level, do you really pay for that? No. Answer is pretty clear. And without that product, you are nowhere. You can't grow your business. You can't grow your personality as in presentation or other things. If you don't have a PDF format, or if you don't have a JPG, these things, you can't even use proper mobile phones as well. This is for a Microsoft. Now let's take example Google. Whatever you want today, you just do a Google and you get the answer, irrespective of even the conversion of words like Hindi to English or English to any other language. You just do a Google and you get the answer free of cost. Do you pay for that conversion? You just think somebody is working for that and you are not paying, and you are using that service free of cost. You see, wherever you wanted to go, you just use the Google map, and the Google map will exactly tell you how much time it will take to reach your place, what is the traffic situation in your journey, where are those junction and everything, what is the toll and everything. Do you really pay for that? Just think over it. So indirectly Google is helping you again in day night of your journey, without taking any money from you. Now please note that some of the people might think that they charge on advertise, and this is total different business. My point is straight. You are using these services, do you pay for that? Now again, in the Google case, you see the YouTube, right? There are n number of people here using YouTubes. There are a lot of YouTubers, and they get a lot of money as well from YouTube, just for posting your videos, and you will see the different likes, and you just go on YouTube and you see lot of shorts and other videos, you put a likes, and on that basis they get the money, and the company pays for that. But actually, have you ever thought that are you giving anything in return to Google or Microsoft for that services? The direct answer is not. Now let's take third example, that is Apple. You see the lot of versions come, Apple 13 recently launched. Now I don't know much about that phone, but we see 3 cameras and other things as well. In a weeks or 2 weeks time frame, you got a same phone, same quality phone from a different companies at a cheaper level, like a 1/10 price of that phone. Have you ever imagined the entire innovation was done by one company, and that that innovation was used by some other company? They made a phone and they sold you with a 1/10 of that cost. So it is like somebody did the innovation, they launched a phone, you see that product, you copy that, and simply you're using that phone. I'm not even talking how much money the other company made it by producing that phone with a cheaper cost. My point is that, have you really paid for that innovation which you are using currently? You just use your phone right now. You just see your phone, what are the qualities it has, and are you paying directly to those innovators? The answer is again no. So these 3 companies, I'm just taking 3 example only: Microsoft, Google, and Apple. They are giving so much to you without any cost, where their shares should be valued. What is the fair value? They are, billions of people are using Google product or Microsoft product or Apple innovation things, where they should be valued. They helped you without taking money from you. Don't you think? Can you value these companies in the money terms? What the satisfaction they gave you, can you value that satisfaction in terms of money? Each individual got a value, satisfaction, and convert that satisfaction into money level. Is it possible? So where the shares of those companies should be traded? So indirectly you give a good vibration indirectly, as in without Google you can't do anything, and you are getting a cheaper rate. Same thing for Microsoft or Apple. And that is one of the reason I personally feel that these companies are valued at the higher level. It is not about rigged or they will sustain this valuation or they will not. I'm not talking on that perspective. What I'm trying to convey you is, if you help someone to build without taking or without expecting from them to in return, you should not be worried about your valuation. And the results are in front of us. The three companies are equivalent to more than double the Indian economy market cap. It is because most of the people are using these things. Now intentionally I have used the global companies market cap to explain you. Now coming back to the Indian economy, I do most of the transaction from a private bank. So have you seen there is a difference between the valuation of private bank and public sector bank. The kind of service private bank gives, I don't think so I have been charged anything in my account by these banks. I'm talking the private bank only, like a 10 rupee charge, 5 rupee charge, this is falana ATM charge. I in my account entire last history, I am never seen that kind of charges. So similar, if you go into the public sector banks, you will see what charges, 5 rupee charge, 10 rupee charge and falana, and these are the charges you see in the account. So if the private banks are giving so much things, secured of net banking and other services, you just do a Google, what is the valuation of HDFC Bank today and what is the valuation of like PNB Bank or SBI. It's like it's cheaper than the peanuts actually. You just see the price of other few public sector banks. The reason because the kind of satisfaction they give it to end user, that what's matter. In our earlier example, these three companies, what the satisfaction they gave to the end customer, and because of that, the kind of vibration that these companies got, the automatically the market caps gets built. Now some of the details, let's understand. The Microsoft or Google or Apple starts charging you for each and everything. So if you are using a Excel, you will be charged 2 rupees for a one use. Or let's take example WhatsApp. Before WhatsApp, every single message was charged like 25 paisa, 1 rupees or 2 rupees as well. I still remember when I started using mobile, there was 3 rupees for every SMS. And today what WhatsApp is giving, free of cost, you share the videos and anything, they don't charge. They are giving a free of service. And if they start charging you, let's say every message are charged for 25 paisa or 1 rupees, what will happen? What, just think it. If they start charging you for everything they are giving, and their intention changes from a satisfaction level to the profitability, what will happen? You will change your mindset. The kind of vibrations you will give it to the company, it's totally different from the current situation. And that's how the market cap gets built at the depending on the satisfaction level. Now if they start charging you there, I don't think so the valuation will be sustained, and that is we call it in our word market risk. You always hear the statement like stock investments are market to risk. Please read the documents carefully before investment. So if a company or investor changes their mind, and due to that the end user gets affected and they change the mind, the stock price may be in trouble. So for example, if a WhatsApp starts charging you every message, they start charging you 1 rupee, your mindset will be totally changed to see how the WhatsApp is doing the business. The kind of vibrations you will send to WhatsApp is total different, and because of that it will affect on the market cap of the company. So in the market risk, what is the market risk? If these two entities, one is company and one is the investors, if they change the mind, any of the company, let's say company changes the mind by charging you for everything, and you change the mind by sending the different vibration, it hammers the stock price. So you need to understand, if something kind of this thing happens, you need to take a decision to close your trade or sell your holdings. You'll have to take a decision. That is, we call it as a market risk. Now there are a number of situations happens, market goes down due to some crisis and again it comes down. If you are in the market for the last 20 years or you see the history, a number of things have happened in the market and the market has gone drastically down. Let's take a recent example of COVID. Continuously 2 days we saw the circuit, and what is today? In less than 2 years the market has gone crazy way. These two companies, you just check the valuation, where these were and what happened. Similar example, take example of Zoom. What happened in the pandemic time, where the company gone up like a crazy. I am sure most of you have used the Zoom app in your mobile phone. Have you paid them a single rupee for using their services? And that is the reason their value, the market cap is at the higher level, because you are helping someone to build themselves. You should not be worried about your market cap. By default it goes at the right level. That is the point which I'm trying to make it. So the fund manager job is very simple, to see these activities, because fund manager doesn't have a different thing. If you see what is most of the people say, okay, see the balance sheet or see the fundamentals of the company. All these details are available on their website or exchange website as well. They don't have a different details than you have it. They have to perceive in different ways, and that is the job of fund manager. That's it, nothing else. They see the valuations, or they see how the company is doing the business. That's it. You have to send the vibration on that basis. If you are satisfying some other people, your market cap should be at the decent level. If you have any other comment on this part, whatever discussion we had it, do mention in the comment box. This is for today. In the coming videos, we will be discussing different topics as well, especially how the individual company should be perceived, where you should invest it. Now, I'm not saying invest into fund or don't invest directly into equities. I'm trying to change the mind or the perception how you should perceive particular company's valuation, and you should do an investment. Apple or Google or WhatsApp or Microsoft, these are the just example. On daily basis, if you are using something and you see a particular company is giving you so much free and they are doing a good business, blindly you should invest it by sending the good vibration to the company, purely from a long-term perspective. Irrespective of where the market is up or down, you should not be worried about it, as long as that company's intention is good. When they change the intention, it will be treated as a market risk. You need to take a prompt decision on that. Otherwise, sales goes up and down, you should not be worried, because every quarter how it is possible to give you a same performance. Sometimes it goes up, it goes down. You should not, I'm not saying directly neglect it, but yeah, don't go only for from that perspective. These are the things which we will discuss in the fundamental and technical analysis perspective in the other videos. Hope you have enjoyed the entire discussion. Thank you so much.